JD.com planning to split up just a few days after Baba made a similar announcement. That's the focus of today's Tech Check, right, Dee?
Yeah, Carlin, this is part of a wider trend. After years of destroying value in the private sector, Beijing, it's now unshackling big tech again and trying to show the world that China is open for business. JD.com is the second public Chinese tech company in just a week to announce it's breaking up its sprawling businesses by targeting Hong Kong IPOs for property and industrials units. It comes just days after Alibaba said that it would split itself into 6 different independently run companies that could seek separate IPOs. Between those 2 JD.com subsidiaries that have filed and potentially Alibaba's logistics unit, which is reportedly in talks with bankers, China's IPO window may reopen soon and before even ours has. And there could be plenty more opportunities if this is indeed the new playbook. You've got Tencent, many different businesses, Baidu, Meituan, ByteDance. All of those have several different businesses under that one umbrella. Diversification for them, for China's big tech, has been key, like it has been for our own big tech companies. Important to keep in mind, though, when it comes to the Chinese ones, this is really full circle from Ant Group's botched IPO in 2020. Remember, that was set to be the world's largest debut. Then Beijing pulled the plug and kicked off years of regulatory attacks and value destruction. So even though we could see billions of dollars reaccrue to these Chinese tech companies, the landscape has fundamentally changed here. By breaking them up, China has also diminished their influence, fixed the whole idea that CEOs like Jack Ma have become too powerful. So by breaking up Alibaba, he is seen as neutralized. And investors can't forget that over the last few years, Beijing has taken these so-called golden shares in private companies like Alibaba, Tencent, and ByteDance. It's unclear what happens to those shares if we see more spin-offs. But if they remain, they do give the Communist Party entities outsized power to influence or even to veto some decisions. And guys, while the crackdown on China's own tech giants may be easing, we've been talking about this for a while, Micron today could be an indication that attention is now shifting to American companies, that we're finally seeing some of that retaliation.
Absolutely. Deirdre, I was going to ask why they're doing this. Is it for some strategic reason, or is it, as you say, a power move by the Chinese regulators to take away the power of some of these huge conglomerates?
Why? Probably simply just because it can. I mean, there's always been questions. What could the Chinese government go after, especially when we were talking about the whole Huawei debacle? Would they go after something as big as an Apple? But you can't go over an Apple because the Chinese love their iPhones. That would be far too disruptive. You have a Micron. I mean, it's not a household name in China. It's the nuts and bolts, so they can more easily do so in a way that maybe you couldn't even go after Starbucks or Nike or Tesla. So watch out for these chip companies, especially with the U.S. export ban.
Yeah.
Meanwhile, they've hosted Tim Cook. They may host Elon Musk. They're going to host Macron in the next couple of days.
Champions of business,
yes.
Right? Come to China for the friendly business conditions.
Certain businesses, yeah, you got to be careful as always. But even at TSMC, right, Taiwan Semi, they need to be friendly, or even a Dutch company, because they need some of that equipment. So where they think they have the upper hand, you might see more pressure.
All right, Deirdre, thank you. Deirdre Bosa.